You know it. Yeah.
Hello guys and girls, welcome to this trade recap. In this trade recap, I'm going to cover the trade that I took on AUDUSD. Now the reason I actually record this trade recap is because of the fact that it highlights majority of the things that we discussed on the profit playbook episode. Again, if you have not watched the episode, please make sure you do, because there's a lot of valuable information that is going to help you in your trading journey. Now, without further ado, let's dive straight into it. Now, this is the weekly time frame. If you look at what happens here, initially this price dropping from this area, breaking this structure low, it created this hook point and it aggressively dropped to the downside. Now look at that momentum that was coming from that area and the hook point that it left behind, which is the value area. Price came back, it take out that area, it aggressively pushed to the downside, and then it built volumes right here. Now, after the volume has been built, what happened? It actually distributed, breaking this structure low. That is, this can now be the point of interest or the value area that we'll be looking to see how price get back to this area and how price reacted to this area. Now, initially, price actually gapped the area, it pushed down. It's going to induce early sellers, the impatient traders, to actually start selling this area. Before you know it, it gravitates back. It will wash out every liquidity that's sitting around this area, and then it pushes back into the structure. Now, where is our target? I'm actually looking to play this range, as you can see. So what happens here? Price came down, it gapped this point of interest, and then it go back up, it come back again. This low, take out this low, but still gap this area. So what we are expecting, we're anticipating that price is going to fill this low, thereby potentially breaking this low and then push back inside. That's now where we can start to look for the move to the upside again. Or however, if we actually break and have a continuation, a solid continuation right here, then we can actually capitalize on the trade more to the downside. But for now, we are looking for price to fill those gaps that is left behind, which is why we are looking for the trade. Now, the most interesting thing that we have to pay attention to in this one is that if we actually use this tool, again, if you want to be more aggressive in this type of situation, you want to be aggressive at the green zone, you want to be conservative at the amber zone, and you want to be very, very, very conservative and carefully selecting any type of trade you are taking around the red zone. Especially at this point, you want to be very, very careful the type of position you take, because these are the areas where we can expect a deeper pullback, a deeper structure, and overall turn around completely. So this is the area that you want to be very, very conservative and carefully selecting your trading positions. So we'll just leave it out for now. Now, as you can see right here, we are definitely in a very strong impulsive phase. Now, look at how direct is the move. The move is very, very direct. It's not as if we are squeezing. So definitely, with the momentum, I was still expecting price to actually make it down to this area, at least for a bare minimum, filling this week. Bare minimum, filling those weeks right here. So which means we can still expect price to come to this area. Now, going to the 4-hour, on the 4-hour, now look at initially on the move, look at the first flag. It was very, very small. The second one, same. This one was a bit bigger. When it was heading towards the amber zone, it was a bit bigger. And then eventually it forms this deeper correction. And then now at the bottom here, as you can see, it forms another deeper continuation from this area. So as you can see, this is where you want to be aggressive, taking small correction. But as price moves on down into the move, you want to be very, very conservative and then carefully selecting the type of position you take. So I think that's solved the puzzle right there. Now around this area, price created this hook point. It came back. As you can see, it created this hook point. It came back in the form of 1, 2, 3. It came back in the form of 1, 2, 3, and it aggressively pushed to the downside again, thereby creating another hook point right here. it creates another hook point right here. The other value area or hook point that you're going to pay attention to is going to be this one. But as you can see, price doesn't make it to that area, but instead price is actually reacting to this one here. So you're definitely going to have this one removed. Now, if you look at this one right here, price actually came close. It misses that, and then it correctively dropped to the downside, which means it forms this as the middle section of the overall pattern, and then it come back up to the upside. So you have the base. You can definitely draw out the base around here. At this point, we can now switch to 1 hour. So on the 1 hour, look at what we have. We have the middle section. We have the middle section. We have impulse, correction, impulse. If you go to line chart, as you can see what we have, impulse, correction, impulse. This was a straight run. Now after the straight run, price aggressively pushed to the downside, which is then we can now go to the 15-minute. My goal was to actually capitalize on this position. I was really anticipating a quick move around here, which is why I have to set my profit target around this area. Now we have the gap. We now feel we washed out a lot of orders, and then we push back. Now we can now go to the 15-minute and evaluate the type of entry that we have. On 15 minutes, price aggressively start to push to the downside. It created multiple hook points around these areas. As you can see, this was the first one, this was the second one. Now around this area, price has internal 1, 2, 3. As you can see that. Now this is our typical type A plus setup where we have 1, 2, 3 into the hook point, and then it starts to drop to the downside. My preferred entry, my most preferred entry would have been this one after the close of that retrace. As you can see, that 15-minute retrace. Or I have my entry around my stop loss around 10 pips, and then my target again would have still been this one, which is 7.51%. But at that point, I was not around, so I actually missed that entry. However, going to 1 hour, it actually gave me that 1 hour retrace around there. So I actually took it on the break after the close, and then I have my SL around 20 pips, and then my target was down here, which is 3.42. It tagged me in, and before you know it, I was actually down here, which is how I take this position. Now if you look at this setup now, this is typical example of everything that we discussed. Momentum, we see this volume that was built. Look at the way price aggressively pushed from that area. It come back to that area, it cap it. A lot of people will actually be selling this area thinking, okay, this is a double top or whatever they may call it, and then they start to sell before you know it, price reverse, take them out if they are still holding in position, and then it drop, give us this, and then it come back, hit our target, and now price is going to the upside again. So this is a beautiful position. Now you have to actually go back to the profit playbook episode if you have not watched it, because there's a lot of valuable lessons there that is going to help you in your trading journey, like I said. So guys and girls, see you on the next one.